Okay, guys, there's a lot to reflect on this week and a lot to look forward to next week. Let's get into the weekend update right now. Hey guys, thanks for joining the weekend update. I always appreciate your time and attention, watching the video and clicking on what I believe to be the helpful links from the week that we're going to get into in just a second. A lot of reflection happens this week, I think, for all of us as Americans, for those around the world, and the tragedy of 24 years ago. I'm always thinking of where I was, as I'm sure many of you do as well, on September 11, 2001. And it also makes me reflect on the fact that that was the year that I became a loan advisor. I got my license and started helping people like you in the industry and started helping our clients own a piece of this great country and start building hopefully generational wealth and security for their families. So it's not lost on me. It's a big week of reflection. I'm going to turn to what happened this week, what's happening next week, and where we go from here. Let me split the screen and go straight into some news. In fact, this is actually jumping ahead, but guess what? The Fed are likely to cut rates next week. They are not likely to cut interest rates. Now, if you look over here on the average mortgage rates, you're going to see that rates right now in the low sixes are about as low as they've been at any point since October. And they only went up from there. And the interesting part is the last time the Fed cut interest rates was September 18th, 2024, and rates have really only gone up since then. Hopefully, I'm not telling you that that's going to be the trend. Once the Fed cut rates, we're going to see interest rates go up. But I'm just saying in the short term, we probably have a Fed move already priced in to the rates we're seeing today in the low sixes. Mileage varies depending on what type of loan you're getting. We're locking loans in the 5% range on our FHA and VA. So again, depending on what loan you have, but there's no question that rates are as low as they've been any point this year, going back to October of next year. So stay tuned to the weekend update dashboard. We'll update it live, I'm sure, once the Fed makes their decision next Wednesday. We'll update some things under. So make sure you have this bookmarked. I want to jump into something that I've been talking about a little bit, though, is that there's always an equal and almost opposite reaction to everything that happens. And there's a reason that interest rates come down. Part of what we're seeing is a lag in consumer sentiment related to job security. We know that the jobs numbers have not looked very friendly, and that's what's giving the Fed some permission, if you will, to lower interest rates. Sagging jobs do not help people's confidence at the consumer level. And we're starting to see that. The report that came out today was that we are at a 4-month low for consumer sentiment. Go ahead and click on that if you want to read about what's happening with consumer sentiment below. On the good news front, though, we are seeing one of the largest gaps between homeowner liabilities related to their home and equity related to home. So this is really great news for owners as it relates to the value of their asset compared to the liability, which is going to bring me to the presentation I really want to focus on this week. There is a link to the mortgage coach. Essentially, if someone had this amount of equity, but we know because I've been talking about it, the amount of consumer debt load that they may have, well, is it maybe an appropriate time to consider a new home with less debt and more financial freedom? And as many calls and inquiries as I get daily, weekly, monthly for refinances, the real conversation that we're having with folks is, does it make sense to refinance to do debt consolidation? Or would it make more sense for you to sell your current home, buy a new home, be debt-free of all your consumer debt without borrowing it, and put some money in the bank and have a lower monthly payment? In this scenario here, if you sold the house that you bought in, let's say early COVID times, 2001, 2002, took the funds after cost of sale, you could invest over $100,000. You could put a portion of your proceeds down, save yourself almost $8,000 a year, and grow your wealth through the investment of your home equity from the sale of your home. So I want you guys to be mindful that when we talk to folks that you and I have helped before about potentially using their home equity to consolidate their debt, part of the conversation that we're having with folks is not just would you need to borrow that money, or would it make more sense to sell that property, use some fantastic tax exemptions you get on a primary occupied home, and wipe out your debt, put money in the bank for investment, lower your monthly obligations, and build wealth not only from the investment of those proceeds, but the continued rise and likely accelerated rise in the value of your new home. Do you have clients that are asking you these questions? We want to do a deeper dive. This is what this presentation is built for. We're also launching a brand new Stanfield Team Client Dashboard. This is for all of our clients as a resource, much like the weekend update, for them to go to on a daily, weekly, monthly basis to let them know, cut through the noise, cut through the clutter and the clickbait, and find out where mortgage rates are today and how that could impact them, benefit them in a refinance scenario, or potentially make more sense to buy and sell. Again, this is the newsletter saying that we're not cutting mortgage rates next week. We are cutting the Fed funds rate, yet to be determined if that's 1/4 or 0.5%. And a final reminder for you all, if you like our content, you get value from this, feel free to share this with coworkers and clients. And please go to the YouTube page, like and subscribe. Finally, featured listing this week is with Jack Archie and the folks at Pacific Plains Realty. Check out some of their listings. I've worked with Jack for years and years and years. He's got some beautiful homes, from affordable condos in North County to homes throughout the rest of San Diego County. Expert team, great listings, easy to work with. And I hope any of these listings help fulfill a need for your buyers. Listen, I appreciate you guys. I'm wishing you a great weekend, and much more news ahead with the Fed decision happening next week. Take care. Talk to you soon.